Today, we're going to be taking a look at the Bitcoin charts, analyzing it from a technical analysis standpoint. Let's waste no time and jump right in. Starting out a bit zoomed out on the 1 hour charts, you can see we're currently here in a bit of a rising wedge. We can get rid of these drawings and these tools here for a second so you can see this potentially a little bit better. This is kind of what they call like a naked chart. So currently, this rising wedge, you can see a rising wedge is essentially this pattern. I'll draw it out right here. And since this is on the 1 hour time frame, we'll also move down to the 5 minute, just so you have a little bit better idea of what's going on in the immediate short term today. And this is just a nice zoom out, but you can see we're basically bouncing off these two levels of support. So we're not necessarily consolidating like, for example, this ascending triangle that I had drawn out and did a nice breakout trade. You know, if you watched my technical analysis video, how basically to perform technical analysis, you could have seen that this triangle right here, we were bouncing in between these two levels, and eventually what we did was test, boom, breakout right there. So that's what's called price consolidation within a triangle. In that specific pattern is an ascending triangle. Ascending basically means the top line is mostly flat. This bottom line right here is rising or ascending. So as you can see, like I said, we are just in this crazy rising wedge. Once we broke past that kind of like $50,000 level, it was just kind of madness. You know, we had a little bit of consolidation right here, you could say. Like you could have done, you know, maybe that was like another little ascending triangle right there you could have drawn. But in my opinion, like that was just kind of how we were moving out of this pattern. So now we are in a rising wedge. A rising wedge is a bearish pattern, but you have to take into account, as I talked about in my Is Bitcoin a Bubble video, we could see $60,000, but we need a proper price correction, a healthy price correction for this bull run to continue, and it's actually good for price. So even if you're like, okay, I just want Bitcoin to keep going, no. You need to pull a little bit of profits along the way, take a balanced approach with it and go, okay, I'm not going to be idealistic with this. I'm going to pull profits because look, every time, like this is an example of a rising wedge right here. Here, I'll just point this out. And although it seems small, if you think about like here, if you think about, okay, at this point in time, when was this? This was about, February. Yeah, so not so long ago. If we just go right here, and we only can see this, okay? So let's say like you can only see this circle, and you're going, oh, it's only going to go up, only going to go up. Wait, that's an ascending wedge, so that's a bearish pattern. You see, now I drew this descending wedge right here at that point in time. We broke out of that. There were some like short-term price movements, kind of did nice predictions on all of those. But again, you see like these descending wedges usually followed by somewhat of a bullish pattern. So it's the opposite with a ascending wedge. So with an ascending wedge, it's inherently bearish, but that does not always mean that we will break down. You know, it could take more time. But I would definitely watch out. We are in this ascending wedge. You know, if we potentially what you want to see to do a breakout trade, it's not just like you want to guess that it's going to break down. What you want to see is a confirmation of the breakout. So for example, we can go to the 5 minute time frame to show this a little bit more exact. But if we basically retest this, so we break it down, retest this as a level of resistance, and then break down from that. That's what we'd want to see. For a breakout, it's just the inverse. So it would be here. We would go, okay, maybe we're breaking up, touch here, touch here. When we go here, we would test this line. I don't have it drawn out, but then we would shoot up, and that's where you'd want to make the trade, is on the retest. So really with breakout trading, again, you want to confirm the pattern. That's the key thing. Like, for example, here, if you would have guessed, like in this ascending triangle, okay, so you see, you know, we're price consolidating in this ascending triangle. We're seeing basically higher lows. So the highs are basically about the same, but higher lows, boom, higher lows, boom, higher lows. But like here, for example, let's say you thought, oh, this is a breakout, it's retesting, but it never went up. So you would have gotten dumped on, you probably would have gotten liquidated, and you might have like panicked there. So the key is to wait for a confirmed volume supported breakout. You can see the volume here at these levels were never quite volume supported. So you can see like right here, this area of volume, we had a breakdown volume support, but we never had a massive green candle. Whereas like right here, for example, we had that nice little green candle right there. So you can see how technical analysis can come in handy when you're looking at the charts, trying to kind of aim for what's going to happen next. and just kind of set yourself up in a position where you could enter a trade. Because again, technical analysis will never be exact. It will always be around like basically a range. Okay, so now we can move down to the 5 minute time frame. We've talked about this in other videos, but essentially, like when I say this is a range, basically meaning when you have these lines, it's not just a line; it's really a range. So it's really in your mind how you want to think about this. You can draw it like this if you're just starting out, but this is really what it looks like. Okay, so when you go, oh, it may have, you may say like, oh, it broke out here. No, 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 that's not a breakout over there. That's not really a breakout because this is a range, okay? So this line is really, same with this line. This is like a range, okay? So how you want to see these is like this box. So like whenever you draw a line, it just to put up the pattern quick. It just should draw it up nice and quick so you can just have a kind of a mental model for where you think it's going to go next. So we can get rid of that box, but that's just how you want to see these patterns, okay? You always want to see them as a range, not as a, not as a as an exact point, okay? So if we pull out the Bollinger Bands here, we can see how this is moving within the Bollinger Bands, and then we can pull out the moving average ribbon. Essentially, Bollinger Bands, our price consolidates in between them. Typically, if it snaps to the top band, it'll push down. If it goes to the bottom band, it will push up. You can kind of see how this is working. So right now, at the time of recording this, we are seeing a bullish engulfing candle, which is nice. And if you watch my video on how to make, I think it's like $100 or $200 a day leverage trading, there's a very simple strategy for this where you're looking for basically bullish engulfing candles when the 1 hour is bullish. So for example, right now, the 1 hour is bullish, so that's kind of nice. So that if it's up here, basically the 1 hour is bullish. If it's in this range in the Bollinger Bands, it's bearish. Okay, so if we go back to the 5 minute, this could be a potential breakout trade. So what we would do here, I can even draw out the position for you, is a potential long position. So we would maybe wait for it to drop down. You'd want this candle to close out to confirm because it could break down. So I would maybe go like right here. That would be a bullish engulfing candle if it goes back down, because we could see just a high wick, and I would set it there. Yep, so right there, boom, we would be entered into the trade. But this candle could reverse on us, so that's why you set a really tight stop loss with this type of strategy. You'd set a stop loss to right there, for example, because most likely after a bullish engulfing candle, we see the next candle continue the pattern. Okay, so we would see, like, for example, this might go bad on us, but it's kind of interesting because we're watching it happen live. But this is just a quick trading pattern to do like leverage trading. So obviously, if you're doing this and you're only doing $100, well, you're not going to make that much. But if you're doing this and you're doing, let's say, $100 on I don't know, 10x or 20x leverage, that puts you in a bit of a nicer position. Now you're trading with $1,000 or $2,000, and even a small percentage of that can make you a decent amount of money. And you're doing a multiple of these trades a day. So another example of this would be like right here. We could just pull out like, okay, so that's a bullish engulfing candle. That's a bullish engulfing candle. This one went up. This one went up. Those are two great examples. This one, see, we didn't quite see a bullish engulfing candle there, but like these, you'd want to close it out here. You want to close it out here because you hit the top of the Bollinger Band, and that's really what you're looking for. And now what you could do if you're, a bit greedy is you could set your stop loss just really tight, or you could set a trailing stop loss. That way you're not closing out, because sometimes these patterns really, really continue. Like let's say, for example, let's go. We could just find a bullish engulfing candle that we can use. So we could just, let's just go ahead and use this one just for ease of use. So let's say you're using this candle. You go here and you think it's gonna just close out there. What you could do is just set a trailing stop loss, because if it goes down like it did, you will close out the position, you'll be in profit. But with a trailing stop loss, if it continues to go up, it'll have that stop loss. Let's say like here, the stop loss would be like here you set, so you wouldn't make as much money as you did if you would close out there. But with the trailing stop loss, essentially as the price goes up, this like blue line that we see, the trailing stop loss follows it. Okay, so if at any point in time it breaks down, it closes out your position. So the reason you want to do that is because let's say this would have been the breakout out of this ascending wedge. Basically what you would have is a nice amount of profit if it broke out of here. If this was the position where it broke out, tested, and bounced. So for example, what we're currently in here, we'll get rid of these. What we're currently in that little bullish engulfing candle, we can swing back over to that and check out how that's doing. So as you can see, the next candle was green. And this is, like I said, a bullish engulfing candle. So you see it didn't quite hit our stop loss. That's why we have that very, very tight, like 0.18% stop loss set. So you barely would lose, like if you're trading with $100, you're going to lose a tiny, tiny amount. So like that's because if the next candle breaks down, that means we're rejecting this pattern, because it could be a fake out. Like for example, this could be a fake out. But most of the time, I would say about 75% of the time, it will be a continuation pattern. So that's basically all for today's video. Just wanted to make this quick technical analysis video. We haven't made one in a while. Show you a little bit of this kind of easy technical analysis using these patterns. We can also pull out the EMA ribbon and go, okay, so we've been bouncing off of this green EMA, bouncing, bouncing, bouncing. Currently, we're hitting a bit of red as we're moving into this. You see, we've just been bouncing off of this green EMA, and we kind of broke down a bit, but on the 1 hour, we're still bullish. So if we break down and again test and then dump, that would be a potential entry position. You'd want to set your stop loss very, very tight. But yeah, if we test there and bounce down, be very wary. Again, I just want to reiterate that these lines, even on an ascending wedge, it's not an exact line. This is a range, okay? And this is just for a section of this. But with all these, it's a range, okay? So sometimes it's not that high of a range, but you have to understand this just in your head. So you go, okay, when I'm looking at these charts, I'm understanding that this is not an exact line. This is a range, okay? So sometimes we see an exact bounce off, like right here or right here, you know. So some of those we'll see an exact bounce, but most of the time it's just remembering that it's a range. So thank you very much for watching this video. If you enjoyed it, as always, with our videos, like, subscribe button all, and invest global. And until next time.